Riding the wave of opportunity, U.S. housing market sees record highs in 2022 with prospects for growth ahead. According to various sources, the U.S. market saw a rise in home sales and prices in 2022, with the median home sales price reaching an all-time high of $320,000 and a 6.3% increase in sales year over year. The number of homes sold for over $1 million increased by 19%, while the number of homes sold for under $1 million decreased by 23% year over year. Despite a double in foreclosure activity in 22, it remains historically low. Pending home sales increased by 2.5% in December 22, ending a 6-month decline and indicating a likely pickup in future home sales. Fannie Mae economists expect a decline in home prices and sales, with prices falling by 6.7% and total home sales dropping by 21.3% over the next 2 years. However, this decline is not expected to trigger a wave of foreclosures due to the limited use of adjustable rate mortgages and exotic products. Low mortgage rates and increase in consumer confidence are driving the demand for refinancing and home purchases. However, the ongoing shortage of homes for sale is the concern for the market. Foreclosure activity doubled in 2022, but remained historically low, according to the article from Inman.com. The article states that in 22, there were 324,000 properties for foreclosure filings, which includes notices for default on mortgages, scheduled auction, and bank repossession. This number is 115% higher than in 21, but still 34% lower compared to 19 and 89% lower to 2010. In 2010, the foreclosure activity was at its highest, with more than 2 out of every 100 homes in the foreclosure process. However, in 22, only 2 out of every 1,000 homes faced a foreclosure filing. The article also mentions that in 22, bank repossessions grew by 67% compared to the previous year, but still remained 70% lower than in 2019. According to the article, the large amounts of equity nationwide seem to be helping homeowners avoid foreclosure. 93% of the buyers in foreclosure today have positive equity and are avoiding foreclosure by refinancing their mortgages or selling the property for a profit. This trend is expected to continue in 2023. The article from Inman.com states that economists from Fannie Mae believe home prices are becoming softer. According to Fannie Mae, home prices are expected to fall 6.7% over the next 2 years due to a potential recession. Home sales are also projected to drop 21% in 23 to the levels seen in 2010. The decline in home prices may set the stage for mortgage rates to drop and sales to rebound, but this is not expected to happen until 24. The decline in home prices is not expected to trigger a wave of foreclosures because of the limited use of adjustable rate mortgages and exotic mortgage products. Fannie Mae projects total home sales will drop 4.52 million units in 2023, a 21.3% decline, but with a partial rebound in 24. New home sales are projected to decline by 12.7% in 2023, while existing home sales are expected to decline due to tight supply and affordability challenges. The Federal Reserve's monetary policy and its impact on mortgage rates will play a role in the housing market's recovery. According to Attom Data Solutions year-end 2022 U.S. home sales report, U.S. home sales increased by 6.3% year-over-year in 2022, reaching the highest level since 2006. The report also found that the median home sales increased by 14.9% year-over-year in 22 to a new all-time high of $320,000. Additionally, the report revealed that the number of homes sold for million or over increased by 19%, while the number of homes sold for less than million decreased by 23% year-over-year. The report analyzed residential property sales deed data for more than 155 million properties in 4,092 counties across the United States. According to the National Association of Realtors, pending home sales in the U.S. increased by 2.5% in December of 2022, ending the sixth-month slide. This increase was seen across all four major regions of the country, with the West region showing the largest growth of 5.5%. Pending home sales are an indicator of future home sales, and the improvement in December suggests that home sales are likely to pick up in coming months. The NAR chief economist, Lawrence Yun, stated that the improvement in the housing market is a reflection of stronger economy and increased consumer confidence. However, Yun also warned that the ongoing shortage of homes for sale continues to be a concern, as it is driving up prices and making it difficult for some potential buyers to find a suitable home. In conclusion, the U.S. housing market in 2022 saw a rise in home sales and prices, with the median home sales price reaching a record high of $320,000 and a 6.3% increase in year-over-year sales. Despite a double in foreclosure activity, it remains historically low, and pending home sales increased in December 2022, indicating a likely pickup in future sales. The low mortgage rates and increased consumer confidence are driving demand for refinancing and home purchases. However, shortages of homes for sale continue to be a concern for the market. According to Fannie Mae economists, the U.S. housing market is expected to decline in home prices and sales over the next 2 years. But the decline is not expected to trigger a wave of foreclosures. The recovery of the housing market will depend on the Federal Reserve's monetary policy and its impact on mortgage rates. If you have any questions or concerns, please do email me at rupa@ruparealtor.com or call me at 732-397-9185. Thank you. Bye.